Hello and welcome to another Smaulgld live stream. It is Sunday, the 25th of August, 2019, and it is Solid Gold Sunday with Smaulgld. On Sunday evenings we cover just gold, Saturday nights we cover just silver. Well, tonight we are going to take a look at registered Comex gold has doubled within a month, and just like we're seeing in silver, gold is flowing into warehouses across the Comex and into ETFs as well. But as we're going to see, retail sales, American Gold Eagle sales, American Gold Buffalo sales, total U.S. Mint gold sales at all-time lows. In fact, right now, this year, U.S. Mint gold sales are on pace to be the lowest year since 2000. Now, the reason 2000 was a low year was because Y2K didn't happen. Everyone stocked up on gold the year before, and then, well, there was no need to buy gold because the disaster didn't happen. It passed. We went back to the internet boom, bubble, and so on, and the gold sales dropped off. But let's just take a quick look at the history of the retail sales. Now, the retail sales do not drive the gold market. You know, the Comex trading, the LBMA trading, that's what drives the gold market. But retail sales are somewhat of an indicator of what the man in the street or the stacker in the street is doing. Let's just take a quick look here at sales of American Gold Eagles, all sizes, and American Gold Buffaloes. And the American Gold Buffalo, the bold gold Buffalo, did not come out until 2006. And that was its biggest year. They get sold 323,000. But look at the big spike in 98 and 99, and when they were selling, I calculated these numbers from, they're not on the screen, but just to give you a general direction here. These are the 1 ounce gold coins, the half ounce gold Eagles, the quarter ounce gold Eagles, and the 1/10 ounce gold Eagles. But the bulk of gold Eagle sales in ounces is in the 1 ounce. Not only does it generally sell more than even the 1/10 ounce size, it is the largest seller. It makes up the bulk of gold sales. But in 1999, the combination of all of those gold Eagles, U.S. Mint sold over 2 million ounces of gold. That's really not a lot of gold. I mean, it's a lot of gold, but it's not in the grand scheme of things, as we're going to see, a tremendous amount of gold. But that was the most that the U.S. Mint ever sold. Right now, the U.S. Mint is at ridiculously low levels. I think 86,000 American Gold Eagles 1 ounce size sold all year. There's been months when the U.S. Mint has sold that much. The total amount, I think, you add in the I think it's 120,000 total of total ounces of American Gold Eagles, plus the 49,000 American Gold Buffalo sold their 1 ounce coins. You're under 200,000 ounces. Look at that. It's to the far left on the screen. If you're not in front of a screen, or you got a phone, or you're driving in the car, all the charts are on Smaulgld the next day, and you can actually take a look at them big size. You can look at them on your computer, on your phone. But to the far left, we have 2019, and you can just see it is a smaller line. Actually, if they were to stop today and not sell any more gold September, October, November, December, which highly unlikely, it would be the lowest year ever. Now, you're already almost done with August, and the U.S. Mint is not selling gold. Now, hold that thought. The gold market opened today, just in the last hour at 6 o'clock Eastern Standard Time, up another 20 some odd dollars. Gold is moving, and is moving higher, and is moving quickly higher. Look at that. Gold price up again. And this isn't just today. This has been happening for quite some time now. For about 6 months, gold has been grinding higher. 1,200, 1,300. Got past that 1375 resistance, went right past 1,400, past 1,500. It went all the way to 1,450 earlier this evening. It's dropped back down about 1,544. I took this shot here about, you're looking at it on the screen at 1,547. This is typical with trading. When the price spikes, it generally gives a pullback. Comex you just don't see a vertical move go much higher than $20, $30 in one particular spike. It's got to trade back a bit, and then maybe it goes up, and maybe it settles down. But the point is, gold has been trading higher it's not like this is a false start. This is a bull market. Silver is still not yet gotten back to even its high in February last year. In 2018, it was close to $18. Right now, silver is up 20 cents. It's at $17.60, so it is moving higher, but that gold-silver ratio is still in the upper 80s. And remember, my opinion, that for silver to take off, its monetary component has to get lit on fire, and that's going to come about when gold moves higher. And at the beginning of the year, I said if gold gets over $1,500 and continues higher, then we could see $20 silver. It looks like we're on pace for that as long as gold continues to grind higher. Now, why is gold going higher? Well, to me, it's pretty obvious. It should be pretty obvious to everybody else, not the typical gold bug nonsense about China crushing the dollar and the dollar collapse and multipolar world, all the nonsense about a global reset, the stuff that Carney was talking about the other day at, I was going to say Bretton Woods, but I mean Jackson Hole. The reason gold is going higher has nothing to do with all of those reasons they were telling you. It's not about a global reset or anything like that. It's about negative interest rates. And a real gold analyst will always tell you that gold does well when real interest rates, where there's a gap between what you can get paid in interest and inflation. Well, right now, they're saying inflation, admittedly, is near the 2% target. And yet, rates across the world are zero or negative. So there's that spread right there. But it's not just the spread. I would feel more comfortable economically if the spread was there was 6% inflation and 4% interest rates, because that's going to balance itself out at some point. But when you have negative interest rates, and the idea is we got to do more of this. We saw the Fed the other day talking in their minutes, not about necessarily going to negative interest rates, but hey, we've already learned how to print money and buy securities and buy stuff, and nothing bad happens, so we can do more of that. Well, that mentality is not just what the Fed has, it's what China has. The Belt and Road, we're going to just build projects, print money, whether we need them or not. We're going to build infrastructure, whether we need it or not, which ends up just being a cost. And then you've got the ECB, Bank of England, Bank of Japan. They're buying corporate bonds, they're buying ETFs, and they got rates down as far low as they can go, negative. And they're talking about whatever they need to do in terms of interest rates. Well, to me, it sounds like they've basically thrown in the towel, and they realize that positive interest rates are no good for them. They can't pay on debt. So they make the people who take out the bonds pay them. That eliminates the issue of having debt to service other than the ultimate debt, which is the face value of the bond. But the more bonds you sell, you roll them over, you stop having to pay interest. The new bonds you don't pay interest on, you get a little money back. Well, now you're in good shape, or at least so they think. And that, I think, is driving the gold price higher. But now we're going to take a look at, this is an obvious situation that we've seen people like Mobius, we've seen Tudor Jones, we've seen DeLillo, big time fund managers saying you got to have gold. I think Mobius says you got to buy it at any price. Now, they're saying this because of the rates, and not because China is going to crush the dollar or because Carney thinks there's going to be a synthetic digital global bank currency. That's just nonsense. That's not what's happening right now. Or Libra is going to... No, what's happening right now is all about rates, debt load, and it's not just about the United States. The debt that's really frightening is the Chinese debt and other emerging market debt, because it's owed in dollars. And dollars, as much as people have been brainwashed to think is a trashy currency and toilet paper, well, it's in demand because all those emerging markets took out all that debt in dollars and they need dollars. So if there's demand for dollars, no matter what you want to say about it, the demand gives it value. You can say, well, it shouldn't have value because it's toilet paper. Well, it has value because the rest of the world thinks it has value. In fact, that's why they denominate their debt in dollars, because no one wants to pay back, and they're not sure. It's not good for their finances to worry about coming up with the amount of yuan or Turkish lira, whatever they happen to be, their country that they're borrowing. When a country borrows, it's a lot easier for their finances to denominate their borrowing in dollars. And that creates demand for the dollar. So all this end of dollar hegemony, de-dollarization nonsense. There's more dollars in circulation. All right, got cut off again, but I know exactly where I was. There's a lot of need for the dollar. So with that need for the dollar, and with the idea that we have negative rates, there is an issue. The issue is if the dollar gets too strong, what happens is you start to get defaults in emerging markets. Now you could say, well, that's fine. The United States will be fine. No, at some point, if emerging markets are defaulting left and right, it does affect the global economy. It eventually affects the United States. So during this gold market bull run that we've had the last, however long it's been, 6 months or so, the dollar has been rising with it, which means the dollar is viewed as a safe haven. Now, a lot of people are into gold. Oh, it can't be, the dollar's toilet paper. Well, eventually, yes. But right now, for most, the reason the dollar is a safe haven is because everything runs on dollars and people use dollars, and that's what they think they want to have. Eventually, maybe you don't want to have them, but in the short term, cash is king. You can use it, you can spend it. You can't spend your gold. Yeah, you could preserve your wealth in it, but you can't pay your bills in it. So that's why the dollar has continued to have value, because the whole world does use it, despite all these breathless pronouncements of end of dollar hegemony and multipolar world and de-dollarization and China to crush the dollar, but the gold-backed yuan and the petro yuan, none of that is true. The dollar is still in demand, but here's what's good for gold, is the dollar will do intervention in the dollar. In fact, Trump has said we cannot allow the dollar. The dollar is at all-time highs by some measure that he uses, but by even the dollar index, the dollar is way too high. And that's why the Fed will probably cut interest rates, may do some type of QE. They won't. I don't think they'll go negative. At that point, if you're now into safe haven, well, the dollar is going to start to get eroded on purpose. Despite the fact that it's rising, the Treasury, the Fed, the president realize they cannot allow the dollar to get that high, so they will cut rates, they'll spend money, and that will leave gold. They've been rising together for a while, but here's the thing. Nothing is stopping gold from rising to $2,000 an ounce. In fact, what was stopping it last time for going past $2,000 an ounce is the United States did not want that to happen. Why? Because it was saying to the markets that QE that they were doing was damaging the dollar, was undermining confidence. They didn't want that. So gold was rising, that gold had to be capped. But right now, the United States and the rest of the world doesn't care what gold looks like. They really don't, because they're all in it together and they're all racing to the bottom. They're all going to negative interest rates. And the United States is saying, hey, we're as strong as can be with this dollar. They don't care if gold goes up. They're going to try to, I don't think they're going to try to stop gold from going higher than, they may try to stop it if it gets over $2,000, $2,500. But there does come a point where the dollar and gold cannot continue to rise together because, as we mentioned, too high of a dollar causes the United States problems and causes the world problems. Too high gold doesn't cause anyone any problems, other than people who are short Comex contracts. All right, let's take a look now. We got a lot of charts for you today. This is gold versus the Indian rupee. You can see it's on its way up. I'm just going to quickly blow through these charts. I'm not going to blow through all the charts, but the gold versus foreign currencies will all be on Smaulgld.com. Just got a few picked out tonight. Gold in Australian dollars, May $2,262. Sky high in Aussie dollars, 2,200 is a record. Canadian dollars, now finally a record, over $2,000, $2,033. This is all because the dollar, you're going to see, these are higher than 2011 peaks, much higher. This is because the dollar is strong right now. But the dollar will get undermined by the United States itself, not by China or any other. In fact, China is annoyed that the United States is trying to undercut the value of the dollar. They're trying to undervalue the Chinese RMB, and look what they've done. Now costs you 10,826 game-changing RMB yuan to buy yourself an ounce of gold in Chinese yuan. All right, let's take now a look at what these stockpiles are amazing. Oh, I just want to show you buy gold at any level. That was Mobius. There you go. Says as central bankers ease. That's the reason. It's not because of dollar collapsing, game over and game changer. It's because central banks across the world are easing. The United States eventually is going to have to ease. They did just ease. They eased 25 basis points, even though they're saying this is just a mid-cycle adjustment. No. They're going to have to lower some more. They cannot allow the dollar to continue to go much higher. In Hong Kong, this is from Refinitiv Metals, but Refinitiv Metals is really Reuters. According to some Chinese banks, while the investment demand for gold has gone up notably, they noticed the rate of changing hand has also been high, indicating Chinese purchase has been for speculation, not for buy and hold hedge against uncertainties. Doesn't matter why they're buying it. Remember, that the reason the dollar goes higher is not because they're buying and holding it. It's because they are buying it and spending it, moving it around. So it's actually, that's a good thing, as Bernie would say, that gold is being traded speculatively and is also being held as a buy and hold. Now, that may be what's going on in Hong Kong. That's a fluid situation that isn't going to last. But let's take a look at these ETFs and what's going on with stockpiling gold. To the far right of this chart shows the increase in gold flows into gold ETFs. Now, unlike silver, which has just gone straight up, but the price hasn't, gold follows. The inflows in gold actually follow the price. You can see the chart. If you can't see the chart, go to smaulgld.com. Go stop the video when you're on your own and look at it. But if you're following along and looking on TV or on an iPad or something, you can see the price of gold. Ever since the peak in 2013 in gold inflows into ETFs, the price has basically just followed it. The price did hit a peak in 2011, but gold flows into ETFs continue to flow into 2013. And I think that's because 2012 they announced QE, and people were like, yeah, we got to get ourselves some gold. But QE3 did not set off a stampede into gold because I think they capped the price once it got to 1900, and they made sure when they announced QE3 in September of 2012 that it didn't do a rebound because, and that's what I mentioned the other day about QE3. QE3 was launched and it really should have been, quote, game over, but they were very, very smart the way they did it. Even though it was the biggest and the baddest and the largest QE they had done so far, they made sure that they were constantly talking about when they were going to end it. They were going to taper. And then when they ended it, they were talking about they're going to be raising rates. It took them a few years to do that. So they did what they call forward guidance, yak attacks. They continue to insist they were prudent. And the Fed has basically followed through on its, quote, prudence, in that it did manage to raise interest rates a couple of percentage points. Something I predicted would happen, did happen. And the reason I said they would do that is they needed to regain confidence in the dollar, to regain confidence that they could sell treasuries because they pay a rate of interest, and to get some space between themselves and the Bank of Japan and the ECB, the Bank of England, and other central banks who would then go about and ease on their currencies and do QEs of their own, making the dollar look much more attractive. Paying interest is still more attractive than the other central banks because the Fed pays a rate of interest and has reduced its balance sheet in the last year and a half. Not very much, but has reduced it, whereas all others are out buying assets left and right. All right, so that's gold ETF demand. And I want to also show you, we're going to take a deeper look at all the gold stockpiles. We're going to look at the Comex files. But I want to take a look at gold and the Dow. Oh, here, let me just give you this point here. As I said in January 2018, something I've been saying all along, gold will go up, not because of any Chinese, Saudi, petro yuan, oil fantasies, collapse the dollar. Indeed, gold is more likely to go up because of a collapse of the Chinese debt Ponzi scheme. We're seeing that happen right now. It's got nothing to do with end of dollar hegemony. See, the gold pump, they just latched onto this idea the dollar collapse and China's going to crush the dollar. It's got nothing to do with that. What's actually happening is all countries are going negative because they're trying to compete with the United States. And the Fed is actually ahead of those countries because it has positive rate of interest. And it probably will continue to have a positive rate of interest, but not at 2%. But let's look now at gold versus the Dow. This is a very important, again, gold traders follow this. even though we've seen a big rise in gold now, you can see to the far right of your chart where you're going from 1240, 1250 in the last 6-8 weeks, all the way over to 1525 on this chart, and another 20 some odd dollars tonight gone up. Remember, since December of 2018, the Dow has also gone up. So you can see they're both going up, gold going up at a slightly higher rate. But the Dow gold ratio now is only 17. Now, when that Dow gold ratio, basically that means is when the number of the Dow equals the dollar amount of gold. So right now, if the Dow Jones is 26,000, in order to have a 1-to-1 relation, gold would have to be 26,000, which it's not. It's at 17-to-1, which is basically dividing 26,252, which is what the Dow is at, by the $1,525, and you get a 17 result. And what a gold trader will do, someone who's just not 100% fanatic, 100% gold bug, they will trade their gold at some point for stocks. Not at 17-to-1, not at 22-to-1, not at 23-to-1, but when it gets to the single digits, even Mike Maloney will tell you that's when you start to look that you say, you know what, my gold is probably overvalued. Because when it's down there, it's probably stocks are cheap and maybe paper assets are the way to go. I know a lot of people say, oh, I can't do that. I have to have gold. Well, you can make a lot of money, at least fiat money, when that happens. Let's show a longer term chart. Again, charts are on Smaulgld.com if you can't follow along. In 1980, we got to the 2 to 3 to 1 ratio, gold, Dow to gold ratio. Back in 2011, the Dow gold ratio got to about 6-7 to 1. That was a good time to sell. It was. But if you held on, it wasn't a bad time. But remember, if you had bought stocks in 2011, 2012, you had that big run up, more than doubled, and gold hasn't doubled since then. So you've done better in gold. Now look at the chart. You can see the black line from 2011, really from 2010, pretty much vertical angle to the far right. You can see the black line. You can see gold made a much bigger run from 2008 to 2011, obviously because you had the financial crisis. But now you can see during that time period from 2008, you still would have been better off if you bought both of them at the same time in stocks. Now we're getting close again to it being a wash, but anyway, that's something to look at. I'm not advising you how to trade your gold if you're traders, but you can see a great time to buy. Gold was in 2000. The Dow gold rate was 45. I mean, no one was buying gold, and the stocks were, they were on a steady incline from the dot-com boom. And you could see that. It doesn't look like much, but it is. You can see it from 95 to 2000, the black line, and you can see gold going down during that period. And then gold holding pretty steady through the 2000s, rising gradually, but so were stocks. But you can see that the Dow gold ratio was well above 40 for a couple of years there, 2-3 years. And then it went down, obviously, as the price of gold rose, and it's been going up, but it's finally starting to go down the last year or so. You can see it's below 20 now, but it had been as low as 5 to 1, 6 to 1 in 2011. All right, that's the Dow gold ratio. We'll take a look at that chart from time to time as gold, if gold continues to rise. We'll look at it even if it doesn't continue to rise. But all right, final charts now. These are the very important charts here. I'll give you some background on these. The headline we're going with is registered Comex gold doubles in a month. Now, let me show you what that means. Oh, another gold pumper one. They all talk about this. Comex default. Comex going to default. There's not enough silver. There's not enough gold. Someone's going to stand for delivery. China's going to stand for delivery. Complete nonsense. Now, I'm not going to bore you with it, but if you Google Comex, why Comex won't default Smaulgld, you'll find all of the what's the word? You'll find a lot of reasons why the Comex is not going to default. That story is as fake as any of your gold pumper stories, gold back you on, game over, and so on. There's not going to be a Comex. Let me explain the Comex default story. It's very simple. Both silver and gold are traded on the Comex, and they're traded in contracts. And each contract represents either 1,000 ounces of silver or 100 ounces of gold, depending on which exchange you're on. Now, in order to settle a contract at the end of its period, the trader has an option. He could take cash, or it could roll the contract over. It could be out of the money and it gets nothing, or it can actually, quote, stand for delivery. And the gold and the silver that's available to be stood for has to be in the form in a Comex registered vault, approved vault, in the form that I mentioned. It has to be in 100 ounce good delivery bars or 1,000 ounce good delivery silver bars. Gold eagles don't count. You can't use gold eagles even though they're totally tested and you know the purity. You can't use Canadian maple leaf, silver or gold. You can't use Canadian maple leaf, silver bars. You can't use anything but these particularly specified types of bars. 100 ounce 995 gold, 1,000 ounce silver 999 silver. Fine. And the silver is held at the Comex approved warehouses, and there's a number of them. JP Morgan has one, HSBC has one, Coins and Things has one, Delaware Depository, Brinks. There's a number of depositories. The biggest depository for silver, which has about half of the 300 million ounces of silver, is JP Morgan. HSBC has about 2/3 of the gold that's in Comex depository warehouses, and that gold is held either as registered or as eligible. Now, where the gold pumpers give you the big never happened before and all this Comex default nonsense, they focus on the amount of registered gold, and they say there's very little registered gold, and someone's going to stand for delivery, and it's going to be game over. First of all, there's not going to be game over. Comex is not going to allow a trader to stand for delivery if there is no gold there. But the problem with that, even that argument, is there is the gold there. It's just that when people put their gold into the Comex, they don't register it. They don't have to. It's registrable because it's eligible. As long as they buy gold that is in the 100 ounce bars or the 1,000 ounce silver bars, then it's eligible to be traded. Now, in order to actually trade it, they have to put it up for sale and register it. Well, if they're not planning on selling it, they don't care. In fact, it's kind of a psychological game. They say, we're not selling right now, so that's why it's not registered. We don't want to show our hands. But if you look at the chart here, it shows there's 8.86 million ounces. That's a lot of gold. The silver's got even more, 310 million ounces of silver. But not a lot of it is registered. So what? You can see there's times, like in 2016, there was only 40,000 ounces registered. Some ridiculous amount of gold not available immediately to be used to settle trades. But it doesn't take long to register eligible stock. So what's happened, interestingly enough, and you really can't see it on this chart to the far right, there was very little registered gold, even though there's 8.2 million ounces in total. The amount that's been registered recently has doubled. Now, that means someone's saying, hey, I bought this at $1,200. It looks like it's going to $1,550 or $1,600. I'm ready to launch it. I'm ready to dump it, which is fine. Now, that just means somebody's getting ready to sell, but even though the amount is doubled, it's really still a very small amount that has been registered, just that it's doubled. You really can't see it here. So I'm trying to put this all in the context for you, that while it's doubled, that's a good thing, I suppose. That means that people are ready to probably sell it, but there's not so much looking to be registered that they need to sell right away. But obviously the price has risen $300 or $400. There's many traders that are satisfied. They've held it in a registered warehouse, an eligible form, and now they're registering it. Okay, but no hyperbole there. Just it's a fact. It has doubled in the past 4 weeks or so. Here's another. This is just the registered. So if you look at it this way, you can see it better. And you can see that doubling from about 33.33 million ounces to 0.66 million ounces. But again, still a very small amount compared to when there used to be like 3 or 4 million ounces registered back in 2012. And in 2017, the registered amount went to 2.4, 2.6. But these numbers can move around. Those are not the numbers you should really pay attention to unless you want to believe one of these pumpers that there's no registered gold and they're going to collapse the Comex. The number to look at is this. These numbers, the total amount of gold. Now, if there was only 0.66 million ounces in total Comex gold and half of that was registered, well, then you could start to say, what's going on here? But let me give you more perspective on why this is not that big of a deal. There's the whole concept of, this is what you hear all the time. This is the gold pumper favorite. This one, here it is. This is the registered gold per owner. So we saw that of the 9 million ounces that are in the Comex, there's only 0.66 million of that's registered. Well, back in 2016, very little of the gold was registered. So, there's 550 people with a claim on the same gold. It's just not the right way to look at it. What they're saying is that there was a number of contracts outstanding at the time, and if all those contracts wanted to settle, the registered gold would not cover it. There'd be 550 claims on it. First of all, there's never that many claims on the registered gold because many of the traders at gold there never ever see or take delivery. They're not interested in taking delivery. If they want to take delivery, they go to the LBMA, they go to a broker, and they buy gold. They don't do trading. This is basically a paper market with a delivery option. You can trade and take delivery, but for the most part, a lot of people that trade on the Comex are some of your favorite bullion dealers. They short every time they buy gold so that it's a wash. All they need to do is make volume in sales. If the price, they don't care if the price goes higher or lower, because if the price goes higher, they have a short on the thing. If the price goes lower, doesn't matter. So for them, all they're trying to do is get the volume of gold sales or the volume of the silver sales. They're not. So my point is with Comex, it's not that it's in constant, as these pumpers try to tell you, in danger of someone standing for delivery, because two reasons. One, the amount of people that do that are low, but the bigger reason is it's deceptive to tell you and to put it in terms of registered gold instead of total gold available, because that's what's actually going to be used to settle trades. But even when it was 550 to 1, it wasn't like somebody says, I'm going to collapse the Comex and stand for delivery. Well, okay, go ahead. What would happen is some of that eligible gold will just get registered and they give it to you. No big deal. Hasn't happened. So anyway, right now you'd say owners per ounce is 90 to 1, which means that the amount of gold that's available and the amount of gold that's available to settle the contract value is 90 to 1. But as I say, that's the wrong way of looking at it, because here's how you should look at it is look at the total amount of gold that's available to settle trades. And back when it was 550 to 1, it was only 7 to 1. You could see on the chart here. Right now it's only 6.7 to 1. That's a little high, but it's not that high. It just means that if you had to settle contracts, there's really only 6 claims per contract. And for the most part, as I say, most contracts are not going to end in a delivery event. They're either going to be rolled over, cashed out in cash, or they're going to lose money and there's nothing to give them. So this owners per ounce concept that gets everybody excited, they repeat it like parrots. It's a scam, the crime act. Yeah, there's manipulation on Comex, no doubt. But this particular aspect is not really disturbing. It is not the reason why there's going to be a problem on the Comex. Because your bank, I'm not making a defense of fractional reserve banking, but fractional reserve banking is far worse than this. Your local bank, I guarantee it, in total cash that it has available to give you, I'm sure that the local bank may have $3 or $4 million worth of deposits easily. Certainly doesn't even have anywhere near $200,000 in the bank there. I mean, the owners per dollar in your local bank is far worse than this. And people don't care. They're used to the fractional reserve, and that's it. Now, that's a separate issue with the banking system. My point is the banking system is far more tenuous than Comex. This is a market that works, even though it's not a one-to-one correspondence, because it doesn't need to be. All right, enough on that. The point is, though, that there's a lot of trading going on there right now, and there's a lot of gold filling into the stockpiles. Just want to show you HSBC. They are, out of the 8.8 million ounces, they've got 5.8 million of them. And you can see a lot of it's not registered, but it's in a form that can be registered. So it's very deceptive for them to jump up and down and scream and yell about registered stock and Comex is going to default. No, that's not. And again, Google why Comex won't default. Smaulgld. There's a video on it. There's like 10 pages explaining why. I'm not going to go through them here. There's like 5 reasons why it's not going to default. And people who sell you that story, and then people who buy gold on that story or silver on that story, that's like buying silver on JP Morgan is buying silver. They're stacking the shiny. No, they're not. Another story, which is nonsense. Okay, now let's finally take a look at, I want to show you how much gold is flowing into these ETF style. Let me get you the right chart. That's not the one. All right, here is, like we saw with silver, a lot of silver. Institutional money moving into the ETFs and so on. Well, look at this. You got, similar to the chart last night in gold, you have 97 million ounces. I mean, that's a lot of gold. Now, in these ETF styles, let me show you the breakdown here. And we'll close with this, and then we'll take your comments. All right, here's the gold stockpile. It's a little hard to see, but I'll read it out to you. Just like the silver ETFs, the big silver ETF is SLV, which is JP Morgan custodian. The big gold ETF is GLD, which HSBC is the custodian. Last 4 weeks, 4.23% increase. That's over 1.1 million ounces added. 160,000 on Friday ounces added. Another big one is IAU, iShares IAU. That's up 5.6%. ETF securities, UBS, Sprott, all adding. Although Sprott's up 1%. A big one was ABSA. They increased 16%. Gold money and bullion vault not really adding much. Now think about that. That's retail money. So as you see, your retail money is not going into U.S. Mint gold. It's not going into gold money in any big way. It's not going into bullion vault. It's not going into, on this chart, Canadian Mint. But it is going into the ETFs. Now, you could say, well, it's paper gold. Well, it is, but the institutions buy paper gold for the most part. So when all these guys are on TV telling you, the big fund managers, when they're telling you to buy gold, they don't go out and buy coins and stick them in their drawer. They go out and they buy ETFs, or they buy Comex contracts. That's where the, quote, gold demand is. Now, that is the big, in quote, smart money. I don't know if it's smart, but I guess you could be stupid and be rich. But the point is, that's showing that the institutional money is moving into gold and the retail money isn't moving really. And the same with silver. The silver sales are down. They're not down as much as the gold sales on the retail side. So it looks to me like these fund managers are totally on board with the understanding that negative yielding bonds are not good, and that the cut against gold, that it doesn't pay interest, is no longer a valid cut. When the bonds don't pay interest, you actually pay interest on them. So why not have gold? It's limited in issuance. It's historically a store of value. Just want to show you this gold reserve by top 10, not to go over the gold reserves by top 10, but the amount of gold stashed away in these ETFs and so on is more than Germany has. It's about 33. It's about the same. It's about 3,300 tons. These are not central banks holding this gold. These are institutional investors, individual investors who have money or gold, presumably in ETFs and all those entities that I showed you that chart for. So that's another major stockpile of gold. All right, well, let's see what you all are saying in the comments. And if you enjoyed this presentation, please consider becoming a Smaulgld patron. Hit our 20th patron just today. Very happy to see that. We've got 3 subscribe stars, so Smaulgld is moving on up on the Patreon league tables. And yeah, and you can also, I also received last night, yesterday was great. We got a, it's got in front of me still. We got those silver dimes from a Smaulgld subscriber, a whole roll of them. That was very kind, very generous. And you can send items of value or checks or cash or whatever to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. Please join as a patron or join on Subscribestar, or one-time payment on PayPal is appreciated, or you can make a recurring payment on PayPal, which so many people do, which is nice. When I say many, means more than 2. And also, please make sure you get your Smaulgld mugs, your game changers. You got your classic, your super classic. Those you can order. I send those out directly from Smaulgld headquarters. All other Smaulgld mugs, pet bowls, you can get at the Smaulgld store, t-shirts, hats, and so on at Zazzle. And all these links, every way to donate, any way to buy anything, or on Smaulgld.com or below this BitChute and YouTube in the description. And you can send Bitcoin or Litecoin to Smaulgld, and people have done that. Far more Litecoin, because I guess it's easier to do, by holding up your phone to the QR code on the screen, or the address. You want to cut and paste an address. Those addresses are also Ethereum too on the Smaulgld website, and also below this BitChute and YouTube. So I want to thank everyone who has pitched in and helped out Smaulgld. So let's see what y'all are saying in the comments. Here we are. Okay, top chat. I got a big crowd here tonight interested in the gold move. Let's see what the gold price is. Dibble asks, has Comex ever defaulted? Well, when they did, see, the reason you got to read my article. But what happened in 1980 was, I don't want to get into a long story here. Comex runs it's like a casino can't go bankrupt. If once they realize they're in trouble, they just shut the thing down. You're not gonna default. So what they did in 1980, they just changed the rules, and they said you can only sell gold on the Comex, and that drove the Hunt brothers out, and that ended the story there. All right, Fiona, Philip, Phil McCain, Phil Quinn, Ann Holloman, the old crowd is all here. All right, Dibble, Small Bugs, there you go. You could say Smaulgld. He's here. Scott Wardell. I recall when solid gold involved any. I don't know what that means. Ken Singer. If gold were to have a high premium when brought to a dealer, would taking delivery on an option get around this? Well, you mean if you buy a Comex contract, yes, and you take delivery. I don't know what the delivery charge is. But buying gold through an ETF and through contracts, you're going to pay a much lower premium on your metal than you are if you buy coins, because of fabrication charge and premiums. But are you actually going to get the metal, or are you going to get settled in the price? And now, if you're gonna take delivery on Comex, you're generally what's going to happen is your delivery. They're not going to send it to your house. They're gonna deposit it at Brinks, or they're gonna put it in the JP Morgan vault. They're gonna put it in a vault with your name on it, allocated storage. Then it's gonna cost you. You're gonna have to send instructions to Brinks or JP Morgan and say, send it to my house. Well, that's gonna cost money. So that's one of the issues. That is why a lot of people are fans of Bitcoin, Litecoin, is you don't have all this logistics and time to move gold or silver. Silver is even harder to move because if you're talking big amounts of money, you're not going to have it sent to your house. You're not going to have pallets of silver showing up. I mean, you're talking people trading a couple of $1 million of silver. You need a pallet to move that amount of silver at today's prices. Even gold, you still have to insure it. It has to be transported. So I don't think there's any way to save transaction costs. Not to plug gold money, because I'm not. But that is a convenient way to, quote, store gold, but you don't have it. Peter Schiff made the point. He's now part of Gold Money. But he made this point, and it's still correct today, that if you want to get your gold out of Gold Money, it's expensive. It's easier just to go out and buy gold and have it sent to you than it is to store gold at Gold Money and then take delivery. It's also expensive and to take delivery if you can out of the Sprott ETFs, because those vehicles are really meant not to be a place to buy gold. They're meant to be a place where they'll store the gold for you. It's just like Comex is not a place really for you to go and buy gold. It's a place to trade gold. People don't realize that. They think that every person who gets exposure to gold wants to hold on to it in their hand. Most of them don't. In fact, there's a story, James Henry Anderson, I always bring this up when we have our interviews, is that many gold traders have never even touched gold. There's this one story where I think it was the LBMA, one of the head ladies there wanted to have a meeting with some of the top traders, and she bought a gold bar, those 100-ounce bars. And it was a gold trader for 30 years. And he's like, oh, what is that? Oh, that's interesting. I never saw one of those before. So I guess the idea is if you want to buy gold and you want to have it, there's no cheap way to do it. I mean, you're going to pay a broker. You're going to have to store it. You're going to have to insure it. That's the problem with gold. Now, the flip side to that is once it's paid for, insured, and vaulted, well, then it's yours. It depends on whether you have it in your possession, you have title to it in a vault at Gold Money or Bullion Vault or Brinks or whatever. But it's not cheap. It's not cheap to transfer. And there is a fabrication charge even on the larger bars. Okay, Christian Borkstrom. This guy still believes U.S. has 8,000 tons of gold. Yeah, well, take a look. I've done a video on this too. That's another gold pumper video. Oh, the United States doesn't have any gold, and China has so much gold, and they're going to crush the dollar. Well, I'm going to tell you this. Why? And the rationale that people give, because it gets repeated constantly. The United States doesn't have any gold because they haven't done an audit. Well, the reason they haven't done an audit is the United States has purposely decided that they're not interested in drawing any attention whatsoever to gold. They want the dollar to be the currency that's used. Now, I'll give you a couple of other things about U.S. and its gold. First of all, who does the U.S. have to prove that it has gold to? Who? Has the U.S. ever had to prove it has gold and therefore the dollar isn't worth anything? No. Dollar is worth more than it is now than it was 40 years ago. The dollar is independent of gold. But I'll give you another example why it's even more ridiculous. The United States doesn't have 8,000 tons of gold that somehow disappeared in the middle of the night. Here's why that's ridiculous. Do you know how much 8,000 tons of gold is worth? It's worth about less than $1 billion. Now today it's worth over $1 billion. 2,000 tons of gold only cost about $100 billion. So if the United States needed to have gold and somehow it couldn't have 8,000 tons of gold, you don't think it couldn't, somehow, I don't even know why it would be gone, it couldn't find 8,000 tons of gold? Well, then you'd say, well, they couldn't because if they were to go out and buy that gold, it would disrupt the market. No, it wouldn't. India buys 1,000 tons of gold, imports 1,000 tons of gold a year, and the price goes nowhere. So somehow, if the United States didn't have 8,000 tons of gold, and somehow it was important for them to have it, you don't think they could acquire it? The United States itself produces a couple hundred tons of gold a year. The whole thing that the U.S. doesn't have gold is just gold pumper nonsense. And it's become to the point, just like JP Morgan owns silver, like it's factual. And anyone who doesn't believe, it's like, oh, he doesn't understand. Yeah, the United States. Yeah, like I have a lot more gold than they do. Huh. And yeah, JP Morgan, yeah, why are they buying 800,000 tons of... They didn't buy anything. These are stories that people just make up, repeat, every channel repeats them, and then they get you to repeat them. not only to the point of repeating them, that somehow you think you have some inside knowledge. Yeah, like the United States has any gold. What does this guy know? He hasn't listened to 10,000, he hasn't binge watched 10,000 gold pumper videos or JP Morgan silver videos. You cannot prove anything by being able not to prove the negative of it. So, the fact that you haven't seen an audit of the gold doesn't mean it's not there. There's many reasons why they don't do an audit. And one reason is they say, well, it's cost a few $1 million. They don't want to spend the money. Well, that is a stupid reason. The reason they don't want to do it is they don't want to bother. There's no reason to do it. The dollar is not harmed whatsoever. The only people who care where the United States has gold are people on the channels. But even if the U.S. didn't have the gold, what difference would it make? Canada doesn't have any gold. Well, they have it in the ground. No, but they don't have it in bullion vaults. The United States has it in the ground too. Grand Canyon, no. Anyway, the whole story is just another gold pumper nonsense. If it did matter, the United States has so much fiat currency that it could buy gold if it needed it, if somehow it wasn't there in the first place, which I don't understand. Also, if the United States needed gold, it holds on to gold for other countries at the New York Fed. You just take that. So the idea that people don't want to believe the U.S. has gold is all this China nonsense. That China's smart. Sun Tzu, they have gold. Crush the dollar. Gold back yuan. China itself is getting crushed. The people who pump these gold stories never tell you the true story of China. That basically, it prints up yuan, it borrows money in dollars, it instructs its state-owned banks to just lend money to state-owned enterprises to build stuff that they don't need. And they say, oh, but they've got infrastructure, and the United States doesn't have anything, and they've got all that infrastructure. Buildings that no one uses, bridges that go to nowhere, roads and railroads that go to nowhere are not assets. Oh, but when it hits the fan, they're going to have all that stuff. Yeah, when that happens, they're even worth even less. If no one's using them now, no one's going to use them in a financial crisis because there's no use for them. But the money, the debt that was taken out to pay for all that nonsense, worthless infrastructure, still has to be paid. The infrastructure has to be kept up, otherwise it's useless. It's going to crumble. Taxes have to be paid. So the fact that they did that is not an advantage in how China is going to crush the dollar. They owe dollars now on all that stuff that they built. Anyway, it's amazing how many people have been listening to this. Because every channel, they repeat the same nonsense and no one ever questions it. And to the point where then they get the listeners to repeat the same nonsense. And then they repeat it so much, they believe it without ever questioning it. And they think anybody who doesn't believe it, yeah, like the United States has gold. Or why is JP Morgan, they got 800 million ounces of silver. I'm doing like they do. They know what's coming. JP Morgan doesn't have any silver. All right, sorry about that. This guy. Christian Gavey, I don't think he understands this guy. For those of you who are small gold long-term listeners, it was the same thing when I explained why the gold-silver ratio was so high. All your pumper channels for the last 5 years, gold-silver ratio unsustainable at 60. Sell your gold and buy silver at 70, 80, 90. And I kept saying, it's going to go higher, it's going to go higher. It went higher. When I explained why it was going to go higher, who is this guy? This guy doesn't listen. JP Morgan, they just pull out a bunch of nonsense. But because I'm one small channel and all the big pumper channels repeat the same stuff, and then of course all the listeners repeat the same stuff, and you get one big echo chamber. Gold is money, period. All right. Sorry about that. All right. Why is the dollar backed by oil, not gold? Okay, there's another old story. Petrodollar, end of the petrodollar. Again, you're not familiar with my work. First of all, the petrodollar was very relevant when it first came out. The idea, I will spend the time on this one. This is very important. In 1971, the United States Nixon took the U.S. off the gold standard. And Europeans said, whoa. We've got all these dollars and you're telling us we can't get gold for them anymore like they used to be able to under the Bretton Woods Agreement in 1944. And Europe was pissed. And they said, well, you know what? But then why if the dollar isn't backed by gold and Nixon's just going to walk away from this agreement, well, screw it. We'll just trade in lira, we'll trade in marks, we'll trade in whatever. So Kissinger and Nixon figured out, well, wait a minute. We have to keep the demand for the dollar strong. How are we going to do that? Well, we'll go to Saudi Arabia because everyone needs to hold dollars, or everyone's going to need a currency to buy oil because They don't have any oil production in Europe. So we're going to make, and Europe was really the only place that mattered at the time economically. China was irrelevant. And the rest of the world, even if Russia was relevant, was under the Soviet influence. So what the U.S. was really concerned about was continuing to have dollar demand for European and Japanese, and they didn't worry about Japan because they were listening to whatever the United States said. They were worried about Europe not using the dollar anymore. So they went to Saudi Arabia and the Gulf state nations, and they said, look, here's what we want you to do. You price your oil in dollars and only accept dollars for payment for oil, and we will sell you stuff, we'll give you stuff for your defense, and we'll defend you in case the Soviets attack or whatever. And that worked. Europeans didn't like it, but they realized they had to hold on to dollars. Since then, however, countries hold dollars not just to buy oil. They don't just hold a bunch of treasuries that they can cash in and buy oil with. For the last 40 years, the dollar's taken on a life of its own. A lot of transactions occur. Oil transactions, I think, are 8 to 12% of international transactions. There's so many other transactions that occur in dollars. So the petrodollar is not really that important as much as it used to be to the United States. Now, what was important at one point and was starting to show some strain was that the United States and Saudi Arabia were having problems. And indeed, if Saudi Arabia did want to pull away from the United States, because the United States was inching closer to Iran, remember, different types of Muslims, Saudis are against Iranians, Iranians are against Saudis, and Iranians are also an oil producer, but not as big as the Saudi Arabians. There was an idea that maybe Saudi Arabia would pull away from the United States. Well, that's never going to happen. And what were they going to do? Well, they were going to accept yuan. But the problem with the yuan is, even though China is a major trading partner, they buy more oil from Saudi Arabia than the U.S. does, is that Saudi Arabia, no one wants. When I say no one wants the yuan, is no countries holds, well, they do, but it's 1, 2, 3% of the reserves in yuan. Why? Because the yuan is subject to devaluation, it's subject to capital controls. It is not a good reserve currency. So even China couldn't force Saudi Arabia to take the yuan, because the first thing Saudis would do was they would sell it for dollars. So there's no point in them doing that. But here's where it gets even more less important, the petrodollar. The United States ditched the Iran deal. The United States told Saudi Arabia effectively, oh, you killed that Khashoggi guy? Don't worry about it. So Saudi Arabia is not leaving the U.S. orbit. But let's go one step further. If you still think that it's important that Saudi Arabia price its oil only in dollars and accept only dollars, and that somehow that underpins the U.S. dollar, it doesn't. Well, the United States is now the world's largest oil producer, and the United States is also a major oil exporter to many countries. So if you believe the argument that somehow countries need to have dollars so they can buy oil from Saudi Arabia, well, guess what? They need dollars to buy oil from the United States as well. So these end of the petrodollar, these are all old narratives. They can Comex default, JP Morgan's buying silver, end of the petrodollar, US has no gold at Fort Knox, ha ha ha, I have more gold than them. This is all just regurgitated pumper nonsense. All right, with that, I think I gotta get going here. End of dollar hegemony. People listen to, you know what happens is you listen to the same stuff for so long, you just start to believe it, and you can't even conceive that there's something else. And the fact that the gold price is rising for the reasons I said it would rise, people don't understand. They think it's still rising because there's a dollar collapse and it's game over, and the petro yuan and China to crush the dollar and Sun Tzu and all this other nonsense. All right, everyone. Thank you very much for joining me. I will see you tomorrow.